Hi there, everyone, and welcome back to my channel where we take different mortgage subjects and we break them down so anyone can understand. Now, our topic for this video is going to be credit reports and credit scores. Credit scores related to mortgage transactions, and overall how credit works in other types of lending. But before we get started, guys, please remember to subscribe to the channel, like the video, share it, and most importantly, put a comment on anything else you want to add or different topics you want to hear about. So, of course, we all know what credit scores are, but something that a lot of consumers don't know is that there are two types of credit reports that show credit scores when a client applies for a mortgage. The report that's being used here by the mortgage company is something we call transactional credit report. Credit companies are the ones that create these credit reports for the mortgage company. And the reason they are called transactional reports is because the credit score is going to be calculated using algorithms designed specifically for the mortgage transaction. All credit companies have these systems built the same. So no matter where a client applies for a mortgage at, they will always get the same credit score reading. And this brings us to our second report that we have, and that's our consumer credit report. Now, these credit reports are usually the ones consumers are able to pull up on their own personal accounts like Credit Karma, Chase, Wells Fargo, or really any other one that they use. There's a lot. The biggest thing with these personal credit score accounts is that it's a non-transaction type report. So in a way, it's a snip of your current score as it stands still. Another thing we need to know and remember is that on average, not all the time, transactional credit reports are going to show a lower credit score in comparison to the personal credit reports. So now that we understand both of these credit report systems, let's review what type of credit scores are needed in order to qualify for different mortgage programs. And the easiest program we're going to review here is our conventional mortgage. So in today's industry, the set credit score a client should have to qualify is 620 as the minimum. Now, again, we need to remember that these credit scores are transactional scores. So if a client is showing on Credit Karma, for example, that they have a 620, there is a good chance that the transactional score is actually lower. Now, these credit score requirements are currently set by Fannie Mae and Freddie Mac for conventional mortgages in the United States. Besides our conventional program, the other two we want to review are the FHA and the VA. So these government programs would allow a client to qualify with a transactional credit score as low as 500. The tricky part with this is that not every mortgage company is going to work with these minimum 500 credit score programs. So if they don't have those programs in place, you can expect the credit score requirement to be set for 620 with the mortgage company to qualify. And other government programs will vary on their credit score requirements as well. And those credit scores can either be submitted for automated approval or the application needs manual underwriting. Moving on to other forms of lending outside the mortgage world, it's important to understand that it's most likely that a lender is also going to pull a transactional credit report when extending an offer or credit. Now, this is not 100% how every lender works when a client applies, but the idea here is to use the same type of systems to make it harder to qualify so the bank takes less risks. Auto loans, personal loans, and credit cards are all subject to different credit reports lenders choose to use and work with when approving or not approving their clients. Now, is it possible that a lender would use the same credit score showing on Credit Karma? Yes, it's very possible. So really all options are available and there is never a one set credit score for all reports or credit transactions. I always recommend to do your research before you let any financial institution pull your credit. And that is it for this video, guys. So again, thank you for watching. Please remember to like, share, comment on anything else you want to add, and please also subscribe to the channel. Thank you all, and I'll see you on the next one.